So you probably have a better insight as a college professor teaching mergers and acquisitions than a lot of individuals I have on here. What do you say the current state of the market is for small to medium sized businesses? Um,
Yeah. First and foremost, definitions. When I was in the wealth management business, we used to call people high net worth investors, and now there's high, there's ultra high, there's mass affluent. So for us, I think of small businesses as below a million in annual revenue, and obviously below a million in profits. That sort of 1 to 50 space is what we call micro private equity, and then 50 and up is lower middle market, up to middle market, up to and above. And so the space that's sort of below $1 million is more challenging than the space above it, simply because it's very difficult for those businesses to get bank financing. So 90% of the deals that we do, Ron, are done with SBA financing because it's plentiful, it's cheap. The government is doing everything in their power to make capital available to small business buyers. And interest rates are at historic lows, all the things that make that attractive. And they have a box, and the box is that they're going to loan you. They're going to have you model out the business that you're buying. They're going to look at the last 3 years of historical earnings. They'll recast it into owner's discretionary earnings, which is the EBITDA of the company, earnings before interest, taxes, depreciation, amortization. They're going to add back owner's comp, and they're going to add back legitimate owner's discretionary earnings. So if I run a company and I take my wife to Nick and Sam's every night and run up a $200 tab, arguably that's not a business expense. And if I can convince a buyer that that's exactly what was happening, I might be able to add that back. And the SBA wants to see, they want to look in the rear view mirror and see, well, what's happened with this business? And so what can we reasonably forecast the future to look like? That they're going to allocate an amount for the new owner's comp, and then what's left has to service debt. So they'll loan up to 90% of the purchase price of the business. It's historically been 80, but right now in the sort of COVID environment, they'll loan up to 90. But you got to pay the money back. And so there's a principal and interest payment due. And they want to see at least a 1.5 to 1 debt coverage ratio on the cash flow that they model to be left. And they're not looking in the windshield as much as they're looking in the rearview mirror. So one of the other challenges we have is owners coming out of COVID, their business is starting to perform really well. And so what they see happening for the last 90 days is really exciting. But the SBA and the banks are going to work off last year's tax returns, right? So again, financing happens more in the rear view mirror than in the windshield, but sellers are looking in the windshield. With that said, there's a lot of capital available for businesses that are of the size where they qualify for SBA loans. And that's above, typically above $1 million in sales, more than a few $100,000 in net income, owner's discretionary income available to pay compensation to the owner and service the debt, principal, and interest. When you get below that, you really are looking at a buyer that's probably going to combine cash and seller financing. And that's a different game, and oftentimes you might even be able to get a little better price with cash and seller financing because of the seller financing component of it. But right now, what I would say in terms of the market of micro private equity, the 1 to 50, where we focus, is the government's printed a lot of money. That money is out there chasing stocks, pushing bond yields down, buying up Bitcoin, pushing up real estate valuations. It is just, we have asset bubbles, my opinion, across the board. As a result, we're seeing family offices in the state of Texas, according to a recent report, at a record high percentage of their portfolios in direct operating businesses. 20 to 25% of the capital being pushed around by family offices is going there because of the relative valuations of other asset classes. So there's a lot of money looking for deals right now, and there aren't enough quality deals, to satisfy that demand. Now, what's not happening, at least not in my field of vision, is I'm not seeing buyers just gobble up and push up multiples to some crazy level because they have to satiate their appetite to buy a business. So a lot of deals aren't getting done. But if you have a quality business, you've got, which means, in my opinion, you've got clean books and records, right? So if you have 3 years of good books and records, which a lot of small business owners don't have, um, or they've been running the business like a personal bank, which is understandable if you run and you own your small business, but that gets muddy and complicated for a buyer to unravel all of that and understand it. But if you have clean books and records, you have sustained profitability and cash flow. If you're growing, that's a plus, and you're bankable, then you're going to get a premium multiple right now. So average deal over the last 12 months on BizBuySell and BizQuest are selling at about a 3.2, 3.25 multiple. That's a middle average, right? And that doesn't account for all the variables that go into that. But if you just took the average business, and I'm seeing businesses sell at higher multiples of that when they are attractive and otherwise good looking businesses. So it's a seller's market right now.